All right, good afternoon, everybody, to another more market open stream here at the DGen Roundtable. I think everybody is pretty excited because Bitcoin, to the chagrin of a lot of crypto Twitter bears who are calling for double top after double top after double top, they're pretty much wrecked. If you've been keeping up with the analysis here, both in the Telegram, if you've been over at the Walk the Block channel, if you've been keeping up with Z's analysis over on our Sunday shows, you know that probability is always favored to bears. Right? Me and Simon were having conversations off camera, talking about how there's always going to be a bear scenario, right? There's always going to be a potential for you to take a short-term short for Bitcoin, but broadly speaking, our targets have always been bullish, right? Especially observing the range. We'll go over that on the chart over here in a few minutes, but just taking a look at what Bitcoin's been doing, consolidating sideways over the course of the last few months or so, you know that every single time Bitcoin is in a corrective structure like it was in for the last few months, following the initial impulse from the April lows, well, if you're an Elliot wave analyst like myself, you know that corrective structures always correct for the prevailing trend, which was an uptrend, and that eventually we were going to see another new all-time high, which we did one after the other. And I'm still pretty bullish long-term, heading into the latter half, it is the latter half, right? April, May, June, we are in July, so we are already in Q3 of the post-halving year. I am still bullish for the second half of the final year, supposedly, of the 4-year cycle. And it seems like we are. I don't really know if you could call this DeFi summer quite yet, because Bitcoin dominance, it's still at fucking 64% plus. So I'd be remiss to say that this is something very similar to DeFi summer 2021 style. But I think it's only a matter of time. For the rest of the altcoin space, I think some altcoins have been doing really well. Hyperliquid, I think Hyperliquid is probably a lot of. I heard Miguel talking about this the other day, that he thinks that Hyperliquid is going to be like the FTX of this cycle. I disagree. FTX, there was no transparency in FTX versus Hyperliquid. Hyperliquid is a derivatives exchange that is on chain, which means everybody knows what everybody is doing. Right? Those order books are transparent to everybody else who knows how to do the research. Right? They're not hidden like they were with FTX. So if Hyperliquid was doing anything nefarious, people would be able to sniff them out really, really, really fast. So I think Hyperliquid is going to keep doing what it's doing because it's the degenerate on-chain playground. Like, quite literally, that it's a derivatives exchange that is on-chain, right? It's a decentralized derivative exchange. So I think Hyperliquid is doing well and will continue to do well. Obviously, Sui and Solana are, like, in terms of like top market cap assets, are doing extremely well. Ethereum is starting to show signs of life in terms of like the ETH Bitcoin ratio. So good on Ethereum there. And then obviously you already know Big PP Pengu, that I've been talking about Pengu since inception, right? Fucking 8.5x from the lows. Aerodrome about a 3.5, almost a 4x from the lows. So there are a handful of assets that are experiencing DeFi summer type gains, right? So it's a good start. And I think it's definitely going to bleed to the rest of the crypto market. We're just waiting for the next impetus, right? The next injection of optimism, which is why we're taking a look at the economic calendar first and foremost, right? Because this week we have a ton of news coming out, both core and headline inflation. And I saw a post, it wasn't just this week, but I saw a post on X today that I see and I hear a lot quite often. And that if all economists agree on something, like if all economists are bearish and that everybody else has a bearish sentiment, right? If the traditional economists have a bearish sentiment, then you do well to have the opposite sentiment. And it's actually reflected quite well here on our economic data. The last few times that we've gone over very similar topics, right? When we're talking about headline inflation, core inflation, PPI, which is the producer price index, which measures the inflation of a basket of particular goods, right? over the past few months, right? Basically this entire quarter, right? I have to go back to Q1 data, but basically this entire quarter of May, June, and July, every single time we've gotten numbers like this, the economists have always said that core, headline, and things like the PPI were going to tick up, which means that they were assuming that inflation was going to tick up because of the inflation readings. And they have been wrong every single time. Every single time we've gotten the numbers, and it's actually been lower, if not significantly lower, and or just flat. Right? So the inflation from tariffs are just not showing up in these numbers. Right? It's just not showing in these numbers. Now, obviously, the sticker shock, right? The sticker shock that you and I might experience as retail people, like the price of food, the prices of transportation, the price of gasoline, the price of housing, the price of utilities, like those things might be reflected, right, to us, but the market really cares about these numbers, right? Because the Fed cares about these numbers, and so the chart will care about these numbers. Right? They don't really care much about what you and I think about what the price of gas is at the pump at this current moment in time. Right? What's going to move markets, right, historically speaking, are the numbers that the Fed cares about. And the Fed cares about PPI, the Fed cares about headline, the Fed cares about core inflation. That's what the Fed cares about, and therefore that's what the market cares about, and that's what's going to be reflected on the charts. Right? So ideally, what we get during the inflation print, which is going to be tomorrow, so if we're going to be expecting more volatility, then we're probably going to get it tomorrow as soon as these things come out, 5:30 a.m. Arizona time, my time. So I don't know what that is your time, but it's 5:30 a.m. Arizona time for me. If these numbers reflect the current pattern, which means economists say inflation readings are going to go up, but then the numbers actually come out and they're either flat to bullish, then the trend for Bitcoin is going to just keep going up. I was trying to put that I was trying to use better language there, but I mean, it's going to keep going up. Right. And then PPI on Wednesday, and then let's see. And then do we have a Fed meeting this month? We do. At the very tail end of the month. Right? So if the inflation numbers come out bullish, flat to bullish, markets are going to pump. And then at the very tail end, right, heading into the latter half of the 60-day cycle, we have the FOMC meeting, their rate cuts. Now, a lot of people are speculating that we are going to get another, first it was we're going to get a rate cut in June. And then now people are like thinking, actually, we're going to get a rate cut in July. I'm like, man, look, the FOMC says that we're more than likely not going to cut rates until September, right? And then we're not even a week prior to the decision yet. So the CME numbers are going to fluctuate significantly, like up until the week of. So I'm not going to put my hopes up on the Fed cutting rates until it actually the day of, and then I'm going to look at the CME numbers 24 hours before the meeting. And then I'll tell you guys what's more likely going to happen, right? But even like at this point, even if the Fed keeps rates exactly where they are, right? Like the market is either going to respond neutrally to bullish, and since that's going to be at the tail end or close to the tail end, I'll have to double check. I think that's close to the tail end of the 60-day cycle. Then we might be looking at either the cycle low or a mid-cycle low before eventually pumping into higher prices to finish off the cycle, right? But if we get a rate cut there, ooh, watch out. Watch the hell out. All right, so in terms of the most hopeful scenario for the market and for Bitcoin, it means we're going to get 2 consecutive right-translated cycles in a row, which means this cycle and then the last cycle heading into the tail end of Q4 of 2025, finishing off the 4-year cycle. Right. Is it still like am I still hopeful for a potential extended cycle? But right? Like we have that scenario in our books, right? We have a scenario in our books that takes us into 2026 because if the Fed doesn't start cutting rates or doesn't start QE or gets aggressive with QE until Q4, then that's your perfect storm theory, like we've been discussing here in the DGen Roundtable, right? Perfect storm theory, extended cycle means that the Federal Reserve does not start QE and does not start printing heavily until the tail end of this year, which means, or I guess extended bull cycle coming into play, right? We don't really say an extended cycle until the cycle low, which is the bear market low, gets pushed into 2027, right? We measure 4-year cycles just like we measure 60-day cycles from low to low, not from high to high, right? So unless the bear market low is in 2027, right, sometime in January or whatever in 2027, then even if we get another push higher into 2026 in terms of Bitcoin and the rest of altcoins, that's not an extended cycle by technical definition, right? And you guys know I'm a stickler for language. Scenario. Worst case scenario is we're gonna go and switch over to the chart here. So just keep these major news events on your radar, because this could really push us, right? The inflation reading, if this comes in neutral to bullish, which means lower than the forecasted and the consensus numbers, right? If they come in bullish, then we're gonna keep pumping. We're gonna keep pumping. So just keep an eye out on that. Any divergence here on our charts? Nope. No divergence on the CVDs. Let's actually go ahead and take a look at Ethereum really quickly before we hop onto the trading view charts. Okay. All right, what's going on with Ethereum here? Ethereum, it's a bit extended, but bullish divergence here. Bullish divergence on our CVD indicators, right? Higher low on the price, lower low on our CVD. Let's take a look at the longer time frames. Take a look at the 15-minute chart here. Same story, right? Same story here for, this was a nice confirmation for Ethereum right here. Higher low, lower low. Taking out the swing high. Almost at 3,100 here on the Ethereum charts. And then right now, same thing, right? Higher low, lower low. So unless we take out this prior low here at around 29.45, then probabilities favor that Ethereum takes out the 3,100 high. So, and getting bullish readings on tomorrow's news definitely favors that scenario as well. And then obviously very impulsive structure here on the 15-minute. So let's go ahead and take a look at Bitcoin. Let's jump onto the Bitcoin charts. And before we jump onto the Elliott wave analysis, let's just give the folks an update on the Loukas cycles. So I see Benny here. So we're actually going to go over both the alternative cycle counts and the primary cycle count that I'm working with. All right. So at this current moment in time, where is it? There we go. Yeah. Nate is asking for some ghetto TA. So give me a second here. We should have some time here, Nate. I'll extend the stream a little bit longer because me and Simon we're talking a lot off camera, so that kind of blame Simon. He was talking my ear off before we started. So okay, so did I hear him go off mute? You have something to say, sir?
I'm compelled to apologize, but actually, let's just gloss over that.
Oh gosh. Okay, so Loukas cycle analysis. my count, my main count, and my favorite count is that we are in a new cycle with a day 22 high, with the momentum currently in favor of the bulls, which means on a balance of probabilities, we are more than likely going to get a right translated cycle heading into beyond day 30. So that takes the cycle low. I think mid-August is when we can expect the cycle low to come in, right? If we're to extrapolate here, 60 days, right? Yep, third week of August. That'd be very nice, because up until this point, every single August has been very, very depressing. And August is my birthday month, so it'd be very nice if on my birthday we keep pushing towards new all-time highs, which would be very nice. It'd be a very nice gift for Jay, right? But this is my preferred cycle count for a variety of reasons, some of which are structural in nature. We'll go over that when we go over the Elliott wave analysis. But a lot of it is based on the Loukas cycles. Now, I know Benny's here, so I'm not going to speak for him. He can comment if he wants to. Now, I know that there are plenty of analysts out there that I know and that I respect. They have their alternative cycle counts putting us at a day 39 high, meaning that this current 60-day cycle is a failed cycle count. Right? I'm going to turn on the alternative cycle count now. Right? These are the alternative cycle counts here, right? We have a day 39 high. The last cycle was a right translated 86-day cycle, and that we have a failed cycle on this current cycle, right? Because this low here took out the cycle low for the prior one. Why do I not like this scenario? Why do I not favor this scenario? For a variety of reasons, right? Number one, I am a structure-based trader, first and foremost. And number two, I'm a probabilities-based trader. Right? You guys hear me say often that things of low probabilities should never be assumed unless all other scenarios fail. That is my rule. We do not assume low probability scenarios will occur unless all other higher probability scenarios fail. And that's just not the case, because we have a higher probability alternative cycle count. Further, if we were to make the assumption that this cycle count is a failed cycle, the probabilities that the prior cycle was also a failed cycle, I'm just not willing to take that bet mathematically, right? Since Bitcoin's Genesis block, we are on, I think, 99 60-day cycles, right? This would be the 100th 60-day cycle. Right? The amount of failed cycles that Bitcoin has had since the Genesis block, I can count on one hand. It's not a high probability scenario, gang. Compound that by the fact that you're counting 2 consecutive failed cycles in a row. Try to math that out. And then further, you not only did you have a failed cycle during the last one, and also an extended 86-day cycle on top of that. It's like you're piling on low probability scenario after low probability scenario after low probability scenario. I'm just not willing to take that bet. Right? Just not willing to take that bet. I'm not saying that other analysts are wrong for thinking so, right? There's reasonable arguments for thinking that we have these failed cycles. However, it's just like, that's just not, I don't like to assume lower probability scenarios being the dominant ones unless all other ones have failed. And right now it just hasn't failed. And then I don't like imposing macro events to justify failed cycles, because then I'd be cherry picking. There are a ton of potential major events, right, that could affect the charts. If I start cherry picking which ones I impose on a chart because I like how it looks better, I'm just not willing to do that, right? Because that opens up the room for a significant amount of personal bias into my analysis, and I'm already biased to begin with. I would rather not inject more subjectivity into the data than I have to, because as humans, we already do that to begin with, right? So I'm just not willing to go out on a limb and cherry pick macro events to fit into my analysis just because it somehow makes the chart look better or whatever. Like, insert reason here. right? So yes, is it possible that we have 2 consecutive failed cycles in a row? Sure. Probable? I'm just not willing to take that bet. All right. And then I know that Benny said that the likelihood of this being a day 7, correct? Because on my count, this would be a day 76 low. Yes, is an extended cycle also a low probability? Absolutely. But you compare that to failed cycles, extended cycles are more probable. Also, this is both according to Bob himself, and we discussed this with Charlie when Charlie was on DRT. We had him on a Whiskey Wednesday a few months back, and we talked about the potential for cycles extending. Right? We went into a deep dive on this specific subject during that stream, and he also mentioned it there that when this all started, right, when Bob started doing cycle analysis, this was based off 40-day cycles. And then as time progressed, they realized that the cycles had started to get extended and extended and extended and extended, which turned into a 60-day cycle. And we even said it during that stream that if we were going to get another extension, that it's probably going to start extending into an average of an 80-day cycle, right? Like historically speaking, taking the Loukas cycle foundation, which he took over from the traditional analysis that Bob Loukas used to do, right? They were based off of 20-day cycles, which turned into 40-day cycles, which turned into 60-day cycles, which now potentially can be turning into 80-day cycles, right? So the historical statistical evidence for cycles getting longer is stronger than the probabilities of us having failed cycle after failed cycle. And to be quite honest with you, gang, if the Loukas cycles start failing more than it does confirming either a right or left translated cycle, I'm not going to be particularly interested in using it as a tool. I like tools that have a high probability of confirming correct data. If something is failing more often as time goes on, I'm just not willing to put money into it. All right, so there's the argument for at least my preferred cycle count. But, I am one analyst, right? I'm just giving you my opinion, right? Based on anecdote, based on personal experience, and based on the data that I've analyzed. But at the end of the day, I'm still human, gang. Right? I'm still human. I'm taking a shot in the dark here. I'm just trying to illuminate the room a bit more with some math and with some history and with some statistics. All right, but I'm not gonna sit here and tell you that I think I have everything right. But again, I'm a probabilities-based trader, right? If I somehow get it wrong and we do have a failed cycle, then boo-hoo, right? Boo-hoo to me. I got one thing wrong out of like the 99 other times that I got it correctly, right? Like I'm willing to take one L out of 99. So that's for the Loukas cycle analysis, right? Again, probabilities really do favor the bulls, especially considering that we're 3 hours before the daily candle close. It looks like we're going to take out the last volume candle high during the impulse, right? Which means if we take out the volume candle high here, that's either a 3 candle or a C candle. Right? It's either a wave 3 or a wave C. But if this 3 candle takes us beyond day 30 for a right translated cycle, then we're looking at more upside. Right? We're looking at more upside. So structurally speaking, 60-day cycle speaking, volume speaking, right? Let's take a look at the RSI here really quickly and take a look right on the daily chart. Daily chart, we are in oversold territory. Right, so never to be ignored, but RSI is a lagging variable. And you can see here that the RSI can stay oversold long before the actual high is in. Right? So, and we have plenty of examples. I mean, look at this one, right? The high, this 110, almost 110K high, right? Even here, this first high here at around 108.2K. I mean, look how much divergence formed before we actually got that major correction down. Right? And what you'll notice here on the chart is when the RSI starts to diverge in a bearish fashion, and you know that the high is getting close, we tend to experience a lot of choppiness as price breaks out to new highs, right? Chop, 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 right? It starts to struggle bus, making those new highs. That's not the case here, gang. That's not the case here, right? Like, this is basically a straight move up, right? That's a straight move up. There's no difficulty yet. There's no difficulty yet pushing towards new all highs, right? So structurally speaking, Bitcoin is bullish more than it is bearish on multiple variables, right? So, like I mentioned earlier when we were having the discussion with Simon, is there a potential to take some short-term entries if you're using some leverage? Yeah, absolutely. There's always going to be opportunities to make money off the downside and the upside, but broadly speaking, broader perspective, we're still looking for more highs. All right, still looking for more highs. So that's what we got on the Loukas cycle analysis. Let's go ahead and switch over to the Elliot wave analysis here on the daily chart. The primary scenario, which is your bullish scenario, is an impulse. Wave 1, 2, 3, 4, 5 already in. Zigzag, right? This is WXY double zigzag in wave 2. Very shallow wave 2. And let me put this on the screen here so you guys can see it. What do we know about wave 2s? Wave 2s, what do? Wave 2s are sharp. They're aggressive. They are volatile. They are quick. When we take the Fibonacci retracement here, right, from the April lows to the swing high here on May, we didn't even touch the 236 Fibonacci level. The reason why I don't even have the 236 Fibonacci here is because it's so rare. It's such a rare target for wave 2s that I don't even have it on my fib pool for wave 2s. That's how rare it is. Right? It's extremely rare. So much so that at the minimum, we're expecting a 382 fib touch. We didn't even touch the 382, right? We only went down to the 236, which is a rare target. We didn't even touch the 382, which is what we expect a minimum to be. Now, you guys remember, I mentioned this a few times before, but if you're also on Walk the Block, you know that we reviewed this quite significantly, right? That in moments of time where an impulse is as aggressive as the impulse from the April lows, you can see how there's very little, right? There's very little extended corrective structure here on the wave 1. Then during these times are the times where you can expect where pullbacks are going to be shallow, right? Because even if we went granular here, right? This wave 2, that wave 2 was shallow, 236 touch. This correction was shallow, 236 touch. This correction was shallow, 236 touch. At the wick lows, I mean. And right here, another shallow retracement, 236 touch. Why? Because the preceding impulse was so aggressive. Now, we went over this historically as well. 2023, I believe. Yeah, this was 2023. So going back a few years ago, right? Yep, this is 2023. Or was it 24? No, it was 24. Early January 2024, just before the approval of the ETFs. Look at these. Look at this impulse, right? This is an impulse. Look at the corrections. 236 touch. 236 touch. Shallow retracements because the trend was so aggressive to the upside. These are some of the few times where, at least if you're an Elliott wave analyst, it's acceptable, or at least it's where you would expect things of this nature to occur. In this case, shallow retracements to the downside. And that's exactly what we got here. All right. There is so much bullish momentum for Bitcoin that every single retracement has been shallow and short-lived. Right. So there's a bit of a history lesson. So what can we expect on the next move up? All right. Well, we have 3 hours until the daily candle close. If we can knock out that volume candle high, wave 3 type behavior. Again, we'll go over the wave C type behavior when we go over the bearish scenarios. But this is wave 3 type behavior, gang. So what are your targets for the wave 3? Between the one, whoa, what happened there? What is that? Between the 1 and the 1.382 Fibonacci extension, taken from the start to the end of 2, start to the end of 1 to the end of 2, right? This is where we get our resistance box here. So that places you anywhere between 147.9K, call it $148,000, to 172.2K for Bitcoin, which is well within, right, our initial targets to begin with, right? These numbers shouldn't be unfamiliar to you if you've been keeping up with the analysis both here on the YouTube side of things, on Walk the Block. We like this has been the base case. Also, if we zoom out here slightly to, let's go slightly, zoom out to the monthly chart, right? We could also have some confluence taking into consideration the last cycle high, 4-year cycle high, and we take that to our bear market low. Where's my, here we go. Right, the 1.618 Fibonacci taken from the 2021 high to our bear market low in 2022, right? The very top, that 1.382 Fibonacci extension is on confluence with the 1.618 retracement levels as well, right? So that $174,000 number. We have some confluence there. Right, so that's our high-end targets. Now, can the wave 3 extend beyond this the 1.382? Absolutely. Absolutely. Right? It can certainly extend. So let me show you guys some moon math real quick here. We take a fib extension from the start to the end of 1. Let's toggle on to 618. The 1.618. 1.618 takes you at $190,000 Bitcoin. Could Bitcoin extend to the 1.618? Yeah. Wave 3s, right? Wave 3s usually do and often extend to the 1.618. But we'll cross that bridge when we get there because we have a lot of levels to cross before there, right? So, right, we always take things level by level. It's okay to have moon targets, but we take things level by level by level. Right? Let's cross 125,000 first, 130,000. Let's knock out these major fibs first before we start getting towards the moon targets. Right. So there are your estimates, right? Those are your high probability targets. High probability targets for Bitcoin during the next leg up, which is a wave 3, right? 147.9, call it $148,000 flat, to $172,000 and 203. Right. We are in price discovery, folks. We are in price discovery. So aside from, like we mentioned earlier, should mention this on camera because it's a pretty big piece of data. If we're in price discovery, aside from your Fibonacci levels, psychological levels of resistance, right? Those very obvious points of resistance, you can also impose horizontal resistance by using liquidity walls, right? Like for example, long time ago. Remember, we took a look at the Ethereum liquidity walls and the Hex liquidity walls on Uniswap V3, right? When you take a look at the V3 numbers for Uniswap, you could see where a lot of people have their limit sells. That's a horizontal level of resistance. All right, so you could use liquidity walls as horizontal level of resistance, right? You could look at it on Uniswap. You could choose your favorite DEX, right? You could look at liquidity walls using DEXs. Right? It's not just isolated to Uniswap. Any DEX that has a V3 single-sided liquidity providing capability, you can look up the numbers. Right? You can look at where those walls are placed. And then further, look at liquidation levels. Liquidation levels, like liquidity walls, are going to give you an idea where a large portion of the market are placing their limit shorts in this case, right? If you're looking at resistance, limit shorts. And then the same is true on the way down, right? Look at where liquidity walls exist on the buy side, and then look at where the liquidity exists on the long side. If you're looking for horizontal resistance. Horizontal support and resistance. Right. But when you're in price discovery, you don't have, right? Like sky's the limit. Sky's the limit when you're in price discovery. Right? The market is going to find resistance where it's going to find resistance. You don't have any history to speak of. All right, so that's the bullish case for Bitcoin. Let's go over the bearish, the higher probability scenarios for the bears. And really, I only have one. The highest probability bearish scenario for Bitcoin is, it's still an impulse, right? So we're still looking for new all-time highs. It's that we're going to consolidate sideways a little bit longer. The bear scenario that I have here is a WXY flat. All right, a 3-wave move. It's a flat structure. If you went granular, this is double zigzag, which is YWXY. But keep it simple, flat, right? 3-wave move in A. This is a B, C, 3-wave move in B. And you're looking for an impulsive move down in C. Now, this is the highest probability bearish scenario, but why is it still a low probability when you consider it versus the bullish one? Well, it's because of, like I mentioned earlier, how far this move up has extended over the past few days. If you take a Fibonacci retracement from the very start to the end of the A wave, right, the 1.618 was sitting at 121,462. Right, the 1.618 Fibonacci retracement during a B wave of a flat is extremely extended, very extended. So that significantly lowers the probability that what you're looking for is a flat scenario, right? But structurally speaking, the move still looks 3-wave-ish on a large time frame like the daily. So it remains on our chart. However, again, take into consideration how far the B wave move has extended beyond the one that, I don't know why I pulled the fib there. I had the 1.618 sitting there all along, right? Because we have broken through this very rare and uncommon target. That lowers the probabilities for the bears. Also, in terms of time. If we were to compare, like, let's make the assumption that your 2 is not yet in, and we're still looking for the low of 2 to come in terms of time. If we take a fib time tool comparing the length of 1 to the length of 2, you can see that wave 2 has already extended beyond the 1-for-1 fib time, which means it's now longer in time than wave 1 was. And the structure is not even complete yet, right? We're still looking for a 5-wave move to the downside in C. And if that were the case, we're looking for wave 2 to extend close to the 2 fib time, right? The second week of August, Friday the 15th. The probabilities that both in structure, right? The structure hitting the 1.618 and in time being that extended compared to the wave 1 also lower the probability significantly. Now, time is never an invalidation, but you combine that with the structural moves of Bitcoin, that makes the argument for the bears weaker and weaker and weaker, and stronger for the bulls. But there always is a bearish scenario. So what are your targets to the downside if we were to dump back down? Well, that actually puts you really nicely to the tail end of the 60-day cycle, right? If we're looking at August 15th, right, as an estimation, that's day 54 of the cycle. So you're looking for a cycle low regardless. In this case, we're just looking for it to be left translated, All right, if we were to take out the low, even if you were to consider, even if you were to consider the count that the alternative count that me and Benny were talking about earlier, right? If you were to take the cycle low all the way to August 15th, 71-day low, still well within the cards. Still well within the cards. Right. Just the probabilities aren't super high for the bears. A lot of support here. You have fibs sitting here, and then you have a few points of controls. Zoom in here. You have a monthly point of control sitting at 104,000. You have the range point of control, right? If you take a volume profile of this consolidation range here, that's 103.7K, so a range point of control. And you have two dailies, 101.5, 94.6K. So a lot of horizontal support for Bitcoin if price were to make a lunge back down there, right? The price is going to find support usually somewhere within the prior range. All right, so even if we dump down, it's like the likelihood that we're going to take the low of A here is low. All right, so you have a bullish and bearish scenario. There's always a bearish scenario, but bears right now, it's not looking good for them. Not looking good for them. All right, so we remain bullish. We remain bullish on the daily. Let's go to the 4-hour time frame. We're going to analyze now this structure here, this impulse. It's either an impulse or it's a correction. Right? Either wave 3 or C, right? We're getting a bit more granular here. If it's an impulse, we're looking at wave 3 already in, volume coming in. Very, very characteristic of a wave 3, right? A volume candle high, largest volume candle during the move up. And now we're looking for a wave 4. Wave 4 between the 236 and the 0.5 Fibonacci level. So that puts you anywhere between 118.7 and 113.8. Right? Probably going to find support somewhere. Where, gang? Where the prior range is. So you have some fibs there, and you have the prior range sitting there, so probably going to find support there as well. Invalidation for this move with a 618, right? 618 is the invalidation for a wave 4, the same way that an 886 is an invalidation for a wave 2 at $111,700. We are a long ways away from 111.7K, so let's not bet on it unless we take out all the prior areas of support. Right. And then we're looking after the wave 4 is in. If this is a wave 4 and not just another small, short-lived correction, right? Because all these prior corrections have been kind of short-lived, right? And then we head into the wave 5 around that 140,000. Well, for the wave 3, let's see. Where can our wave 3 extend to? Let's not guess. Let's take a fib. We're getting close to the 1.618 extension. Right, so $124,000 for the wave 5. Before, well, if we're getting a right translated cycle, I think we're looking at a bigger move than just $124,000. So probably closer. Let's toggle on the 2.618. Let's see what the 2.618 tells us. Okay, there you go. 137,000 might be a long shot, but I think 100. Take the middle, probably $130,000 for the wave 5 is more probable. Right, during this wave 3 of 5 move. But we'll have better numbers for you, gang, once we actually confirm that the 4 is in. Right. So This is the bullish scenario. If we are going to pull back, we're going to find support somewhere at the prior range between the 0.236 and the 0.5 Fibonacci levels. That puts you 113.8 on the low side, 118.7 on the high side, within the validation sitting at 111.7. Then finally, this is your correction. Right, looking for X, W, X, zigzag and W, zigzag and X. You're looking for an A, B, C, zigzag, right? C is already in. And now you're looking for that 5-wave move to the downside for C in a flat. Right? It's either a flat, or if you're looking at W, X, Y, right? It could either be a flat, which means this is going to be impulsive, or if it's a W, X, Y, even worse news for the bulls. Why? Because in a sideways corrective structure, which is what this is, if your W is a zigzag, your X can be any corrective structure, but your Y cannot be another zigzag. That's a no-no. So this can either be a flat, A, B, C, flat, or it could be a triangle. 1, 2, 3, 4, or A, B, C, D, E, up. Right. So it can be those things, but again, probabilities. If we are still in the middle of the correction, especially if it's the last leg of a WXY, that is going to extend wave 2 super long. Time is never an invalidation, but it does have to factor into your analysis. And extending wave 2 that much, I'm just not going to put any money on it. But it is and will remain on our chart because the structure is there. Right? But if this turns into a 4 and then we take out the high, sorry, bears. Sorry, so sorry, so sorry. Right? And that should do it. That should do it. Any questions on Bitcoin before we move on? I know Nate wants me to do an analysis on Codex. Do you have the contract address for me? I'm gonna actually let me pull it up. Let's see if we can find it on CoinGecko. Codex. It's okay, Nate. I'm already here in CoinGecko. Just give me a thumbs up in the chat if this is the correct ticker. Is it any of these? Sandy Codex, Codex multi-chain? Let me put the 3. Oh, there it is. CDX, Nate. Give me a thumbs up or thumbs down. CDX. Okay. Before we jump into the charts, let's do some fundamentals. Okay. Market cap, 1 point. Damn, bro. This is a low liquidity coin if I've seen one, or a young coin if I've seen one. $1.5 million in market cap, bruh. Yo, if you're in this, if you're in this token, Nate, bro, I wish, I hope, I will pray that you make, because, bro, if you're in this early, oh my God. Like, you're talking, if this thing takes off, right? If this thing gets some steam and you're in at a million, $1.5 million valuation, you're looking at like 50, 100x plus if this thing takes off.
I have some of this token. I think a few people do.
Nice.
Not a lot.
Nice.
Not a lot, but some.
Right. I hope this thing takes off, because if you guys got in earlier at a $1.5 million valuation, this is early. This is what we mean by early. Like early. Circulating supply, 52 million. Total supply, 52 million. Okay. That's good because that means there aren't any VCs waiting to dump on your head because they have a vesting schedule. That's good. We do have a max supply of 100 million, which means they're either printing more of this token, right, through staking or something. I don't know the details, right? But the fact that the total and the circulating supply match is a good thing, right? Actually, this might mean that there are vesting schedules. Like, you guys are gonna have to correct me on that if there are vesting schedules for people who got in earlier, right? But as of right now, circulating in total, very good. What's the pitch? AI framework created in 2023, which powers more than 400,000 Oh, it's an AI agent platform. Okay. All right. Well, there's a lot of AI agent platforms, but if you're going to get in one, if you're going to take a bet on one, might as well be something that's $1.5 million in market cap. Because what's the other, I think, AIXBT? AIXBT. Virtuals. Let's take a look at virtuals. Because compare that to virtuals. What's the market cap of virtuals comparatively? Fuck me. $1 billion in market cap? I mean, virtuals is still a good AI agent bet, right? So if you're going to take a bet on one, might as well be virtuals. But if you want to take a shot at something that's early, $1.5 million valuation, yeah. Aside from that, I couldn't really tell you what's special about it because it's an AI agent platform. Let's see. All-time low. Great. So you're not even entering at such a high valuation in terms of gains from the low, right? It's 74% up from the all-time low, which was May, just after everything came up off of the April lows. So you're still pretty much buying at 87% down, which is good news, right? So if you're trying to enter, right, you're not entering at such a high market cap, which is good news. You're still pretty much early, and you're not entering at a high number of X's from the lows. Let's take a look at markets. It's on Radium. Good. It's on Radium. Volume doesn't look too good. So if you're going to trade this asset, you're probably going to have to buy in small lump sums because the volume here is pitiful. Right, so Radium, good, low fees. Uniswap V3 on base, low fees. And V4 on base, okay. Okay, so it's on base and it's on Solana. So if you're going to trade this, might as well trade it on a platform that has low fees. That's good. Just the volume is, right? I mean, goddamn, that is thin. So you just don't ape 5 figures into this thing. The slippage will kill you, and the bots will kill you. But let's take a look at the chart. Let's take a look at the chart. Oh, I hate looking at charts on CoinGecko. I'll try to pull it up on TradingView. Let's go max log. Yeah, it looks about right. Okay, Codex. Let's take a look at it on Codex. It's a 3x. What? CDX. There we go. Uniswap. Nate said the best pair is Codex with Big Tony. Here we go. Well, this is Big Tony on. So this is gonna show me the Big Tony Codex chart, which I can't invert. You can only do that on deck screener, and I hate deck screener. Radium. Let's take a look at. Okay, I'm gonna have to switch daily chart. That's not the entire history. Let's crypto. Maybe this one. I don't like any of those. All right, Uniswap V3 base, USD on base. That does not give me the history either. Nate, do you have a chart that gives the entire history? I mean, I could analyze this damn thing with what we've got here, but ideally, I want the entire history. This one. What the? Oh my gosh. That's not good. Nope. 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 All these charts suck, Nate. Tried all of that. Okay. What in the... Man. That is a shitcoin if I've ever seen one. Well, such shitcoin chart. I don't know if it's a shitcoin itself. Mexi. All right, Mexi. Oh, there we go, Mexi. Okay, is this... Where does this go back to? 2020 to 2024, I guess. When was this? Is it max? Man, not even... Bruh. Not even CoinGecko has the max chart. That's okay. I think this is probably the best we're going to get. So... let's stick with it. Let me just see if it's the same ticker. Oh, this year, February. Are you sure we're talking about the same one, Nate? Because this thing... Because CDX, I'm pulling it up on CoinGecko. CDX, so that's not the correct chart. This thing says it was created in 2023. Let's pull that contract address on base. Okay, well, I guess we have to stick with that one. All right, we'll stick with this one, Nate. Because this is what we have, and that's what the contract address pulled up. So at least I know that this is the correct ticker. I'll go to switch to the daily chart here. Good move off the lows. So it moved off of the April lows, just like the rest of the market did. That's a good sign. I don't really know if I would call this an impulse. right? That's a very mess. So I'm not even gonna. If I were to try and impose Elliott wave structure here, this looks more corrective than it does impulsive, right? It's a 1, 2, 3 ABC, right? Like all of this stuff right here, correction. Like this doesn't look pretty in terms of structure, right? So I'm not gonna try and impose an Elliott wave structure on this, even though I'm pretty sure some analysts can. Here's the thing. So in terms of upside potential, let's just go to the weekly chart, right? In terms of upside potential, you don't really have a lot in terms of resistance until you get to day one, right? Until you get to day one, close to day, like not day one, like month one numbers, right? So the next major horizontal you're going to get here for Codex is 10 cents, right? And then on the weekly, the support is very obvious in terms of your horizontals. On your weekly chart, if you're looking for a buy-in, you're looking at about 6, 12, 18, like a 30% drop or so, down to 4.5 cents. All right, just like in terms of major horizontals on the weekly, right? Horizontal there, about 4.5 cents. And then horizontal here in terms of resistance for the upside at 10.3 cents. Right, so 10.3 cents, profit-taking opportunity potentially. 4.6 cents, your next buy if you're looking to buy into the dip, right? Because on the weekly chart, this is your major horizontals right here on the weekly chart. Right, if you were to go lower, 3.5 cents is your next target. All right, 3.5 cents is your next target. This is definitely a scratcher bet if I've ever seen one. Because if I'm going to be hopeful on something, if I'm hopeful that it's going to catch steam, like these volume candles have been flat on the weekly, even after this massive move here, which means when you consider the volume the trading volume that's occurring on the exchanges, that doesn't inspire much confidence in me, because these candles right here are being made on low volume, right? Which means nobody's trading it, which is reflective of this, right? If we markets, look at the 24-hour volume occurring on the daily charts here, on the daily here. On Radium, there's less than $1,000 worth of volume. On Base, there's less than $2,000 worth of volume occurring on a 24-hour basis during a time when Bitcoin is pumping, which means almost nobody's paying attention to this altcoin. Now, a lot of coins we talk about today, nobody was paying attention to in the beginning. Nobody was paying attention to Bitcoin in the beginning. So there's always that. There's always that. But am I going to take more than a scratcher bet on something like this, especially in a space that's saturated with altcoins? I wouldn't, but that's a personal opinion. That's going off by what I can see here. I have not jumped into. I've not done a deep dive of the fundamentals of this coin. So I can only tell you what I can see on the chart, structurally speaking, and I can only tell you in terms of like what's happening on the exchanges where it's listed, right? And what it's telling me is that nobody's trading this coin. And that's not a good sign for an asset that's supposedly in the middle of a bull market, right? With Bitcoin making new all-time highs and Ethereum continuing or starting to show life. So I don't like that. I don't like how that looks. But you did say it was only a scratcher. So if I were to invest in this token, I wouldn't put more than a scratcher in it. But if this thing does take off, man, are you guys going to make some serious fucking money? So take profits. But that should do it. Let's check if we have any other questions, comments, concerns in the chat. Okay. Nate says I should buy some, join the party. I'm happy. I'm not really looking to enter any new positions right now, Nate, to be quite honest with you. Right. My last major position I took was in Pengu. I have an irresponsible amount of pudgies. I'm not really looking to enter any new positions right now, though. Staking feature. Well, the supply is capped. So the good thing is, if you're staking codex to get more codex, that means eventually there will be no more codex. Right? If the yield is in codex. So, good news is, even if there is a vesting period for the whales, they're gonna have to make peace with selling into thin liquidity. So I don't think you have to worry about whales giga nuking the price anytime soon. But do be careful, because if a whale does get trigger happy, it can nuke this price down into new all-time lows with ease. That liquidity is very thin. So, okay, that should do it. That should do it for today's analysis. Any other questions, comments, concerns before I sign off here? We've gone for at least, what is this, about an hour and a half already?
Jay, I'll just say that I'll be streaming at 6 o'clock here if they're running on time for the PulseX conference.
Oh, shit. Yeah. Gang, go ahead and show.
6 p.m. tonight and 1:30 p.m. Eastern time tomorrow.
Hell yeah. So, go and show Anonymous Bean some fucking love. Bomb that chat with chance for Anonymous Bean during the PulseX. It's the one by RH Max, right, Bean?
Yes. Yeah, that's one.
Yes, sir. Right. Go show support. Go show your love for our favorite coffee bean. All right. Thank you, everybody, for joining us on this wonderful Monday afternoon. Until then, remember, trade safely. And as always, DJ responsibly. Take care. Bye-bye.